Good day. Don't forget, this is Chartered, your accounting tutor. The topic still remains double entry system of bookkeeping under introduction to accounting. And we are going to use the principle of double entry to post the illustration you can see. Here we are going to continue from the previous video, which I was introducing you how you can post double entry using the ledger account. And the other video, we're looking at how entries are posted into the continuation. We want to know more of the entries or more of the transaction, how they are posted into the ledger accounts. So in today, let's look at two entries that are commonly used in the business. Number one, on the 5th of April 2026, sold goods by cash 30,000. Then we also have on the 6th of April 2026, sold furniture by check 30,000. Let's see how we can post this transaction using the ledger account via the principles of double entry. Now, here I emphasize that in every transaction there must be a receiver account and there must be a giver account. Let's look at the receiver account and the giver account in the first transaction. Mind you will now say sold goods. Sold goods in accounting means sales. Sold goods in accounting means sales. Don't open goods account. Sold goods in accounting, what is sales? Sales are the goods that the business purchased to resell. So that is what we refer to as sales. So if we say sold goods, we mean sales account. And sales is revenue. And all revenue are credited. And sales is also what? Credited. Then the next thing is, this is the giver. You are giving out sales, and the sales become the giver account. You are giving out what you are selling, and that become the giver account. Then second, this is cash. Cash become the receiver account. Why? Because as you are giving out your sales, you are receiving cash. The business is receiving cash. Then cash become the receiver account. Then we say that debit the receiver account and credit the giver account. So here, the giver account is sales, which is sold goods here, but don't write sold goods. Sales become the giver account, which we credited, and the receiver account is cash, will be debited. Then let's look at it here. This is sales account. Sales account, in the previous video, all these headings were not there. That doesn't mean that they are not relevant. And that is why I introduced you that if we draw a full ledger with the respective heading, the basic heading, our most fundamental is we have the date, we have the particulars, or you can call it detail, and we have the amount. Both in the debit side and the credit side, you rule your ledger in the standard way you can see. So anytime I did not put it like that, just note that this is how the ledger is being arranged in terms of the particular heading in all the respective ledger. So in other previous video, this heading were not found, but in this case, I brought them to enable you to know the respective heading that a ledger contains. Let's continue with the posting. Now we say we are going to credit the giver account. The giver account is says let's credit on the faithful date, which is 5th of 4/26, sales the giver account. And as sales is giving to cash. Mind you, I say that the giver account give to the receiver what the receiver receives from the giver. So you can see sales is the giver, what the business is giving out in form of goods to receive cash. And how much is the amount? The amount is 30,000 naira. As the giver account give, the receiver account will receive. And the receiver account here is cash. It's cash. And on the faithful day, which is 5th of 4/26, the receiver account, which is cash, is receiving from the giver account. And the giver account here is sales. Is sales. And the amount is 30,000. As I always say, in double entry, any debit entry, this becomes an entry, must have a corresponding credit entry. So this is the debit entry one, and this corresponding entry, then it becomes double entry. Let's really go to the second one. Here we now say on the 6th of April 2026, sold furniture by check 30,000. Here, what is the giver account? Mind you, I'm still emphasizing, the giver account is always what you give in a given transaction. So here, the business is giving out furniture. Furniture becomes the giver account. This is sold furniture. Most learners confuse this to sales. It's not sales. When we talk of sales, sales is when you sell goods. Goods are the things the business buy to resell. But in this case, furniture was purchased. If you recall from the previous video, which I said that the business started with furniture worth 5,000. It simply means that The furniture was meant to use in the day-to-day running of the business, not for sale, because it's an asset. So in this case, that very furniture was having an issue. Let's take it like that. People want to sell it out. So if he's selling it out, it's not goods. It's not selling goods. Therefore, it is furniture that becomes the giver account. It's giving out furniture. As you can see, the value 3,000 means the furniture to extent has been depreciated as accounting. That means the value reduced from the 5,000 to 3,000. But what are we saying? Furniture become the giver account, and then furniture become the giver account, and then we are giving out to receive check. And here, most lenders feel we should open check account. No, it is not check account. Who issues check is bank. So the giver account will become bank. Don't open check account. If you open check account, it's not correct and it's wrong. So in this case, check here is standing for bank. Bank. Meaning anywhere you see check, it means use bank. So here, the giver account become furniture, what the business is giving out, and the receiver account become bank, which here is check, but bank become the real name that we use in accounting. Let's see how we put this transaction. Please always start with the giver account, because the giver account must give before the receiver will receive. You want to get it right, always start with the giver account. Let's see, who is the giver account? They come here, I said that the giver account is furniture. In furniture that have been sold out, they become the giver account. On this fatal date, which is 6 of 4, 26, the giver account is furniture, giving to receive check. And that check will be qualified to be called bank, because bank that issues check. And the amount is 3,000. The amount that the giver account gives, the receiver must receive. And the receiver here is bank, because meaning that you sold out furniture to receive money into your bank account. On this fatal day, which is 6 of 4, 26, the receiver account, which is bank, is receiving money from the furniture that was sold. Then in this case, furniture become the particular as a receiver. Then bank receive money through the sale of furniture, and the amount is 3,000. And then in this case too, we say this full become what's an entry. I want to remind you, an entry, a complete entry in accounting, how to do with date, how to do with particular, how to do with the amount, both in the debit and credit side, as the case may be. So here, this become a full entry, and we call it entry 1. This become another entry, is entry 2, and this become what is called double entry. Watch me out in the next video as we give more of this illustration to clarify how double entry or transaction of the business are posted into double entry. Thank you.